Welcome back to the deep dive. For you, our astute listeners focused on Wall Street, we're cutting through the noise in today's Wall Street Journal. We aim to bring you only the most critical, actionable insights from across the market.
Exactly. Our mission is really to distill the core information you need quickly and clearly. It's all sourced from the Wall Street Journal, published Monday, July 7th, 2025.
Okay, let's unpack this market then. We've seen U.S. stock funds rise, an average 10.1% in the second quarter. But here's what's really striking me. This renewed taste for speculation. Shares of unprofitable companies, Avis Budget Group, Carvana, AIVA Technologies, they're significantly outperforming.
That's right.
It pushed Goldman Sachs's index of retail traders' favorite stocks to a new record. Does this feel like classic irrational exuberance again, or something different maybe?
Well, it definitely highlights a key tension, doesn't it? You've got these YOLO bets offering quick thrills, pushing that Goldman Sachs retail index to its first record since, November 2021? But, and this is crucial, analysts strongly caution that sustainable long-term returns, they always circle back to earnings. It's fundamental.
So these waves can crash.
Exactly. It's a critical reminder for you that speculative runs are often short-lived. Fundamentals matter.
Okay, so from individual investor speculation, let's zoom out a bit. How are the big institutions recalibrating? We're seeing this significant strategic move at JP Morgan Chase's private bank. Is this just for the super rich, or does it signal something broader?
Oh, it absolutely signals a broader trend. I mean,
Yeah.
yes, JP Morgan is reorganizing its private bank specifically for these ultra-rich clients. They increasingly want to spread their wealth globally.
Why now, though?
Well, the aha moment for them, it seems, is realizing that growing geopolitical conflicts, global trade war risks, this stuff is real. It's compelling top clients to diversify assets across different countries, different regions.
So less country-specific focus.
Much more multi-jurisdictional investment. And that impacts how global capital flows, definitely.
Speaking of global, then, how should investors think about international stocks right now, especially with U.S. markets having had such a strong run?
Yeah, good question. International stocks have recently asserted themselves. They've actually outperformed U.S. stocks significantly in the first half of this year.
Really? By how much?
Returned about 18.2% compared to the U.S. market's 5.6%. Big difference.
Wow.
And this comes when U.S. stocks, well, they're trading at a higher valuation, around 23 times expected earnings. That's, pretty high price-to-earnings ratio.
Compared to?
Compared to non-U.S. stocks at just 14 times. So you see the gap.
Okay.
Many experts are suggesting maybe a 30% to 40% allocation to international stocks just for diversification benefits, especially with, say, Europe potentially moving towards more fiscal stimulus.
This discussion of global forces and valuations, it leads us pretty naturally to policy decisions back home. How is the administration's fiscal approach and this desire for lower interest rates, how is that impacting the economic landscape for us all?
Well, Greg, it points this out quite clearly. President Trump wants lower interest rates, partly to fund fiscal priorities. And you see the Treasury tilting debt issuance towards shorter-term securities.
Which is a gamble, isn't it?
It is. It's a gamble. I mean, sure, yields have fallen recently, but the risk of inflation, it's always there if interest rates are kept persistently too low.
That's true.
Despite the Fed's mission,
And the deficit picture.
The U.S. is staring down potentially unprecedented large deficits. They're projected to climb to $3.3 trillion. That's nearly 8% of GDP.
Wow, 8%.
Yeah, especially if those temporary tax cuts get extended. It really is a high-stakes situation.
Speaking of high-stakes economic pressures, what about these looming trade deadlines? Are markets just shrugging it off?
Well, this week is pretty crucial for President Trump's trade deals. New tariffs are slated to hit dozens of countries otherwise.
Okay.
And while markets have sort of largely recovered from the earlier tariff scares, that underlying policy unpredictability, it still leads to hesitation. Businesses aren't making big long-term investment plans.
So they stocked up earlier, but now?
Exactly. Companies initially stocked up on imports to buffer the tariff effects, but long-term decisions still kind of on hold because of this flux.
Okay, let's shift to a critical long-term concern for many listeners, Social Security. What's the latest on its solvency?
Not great news, unfortunately. The Social Security Trust Fund is now projected to face insolvency by the end of 2032.
2032? That's a year earlier than they thought before, right?
A full year earlier, yes, partly due to the new tax and spending bill.
Are there any innovative ideas being floated to fix it?
Well, there's one provocative idea from a former official. It involves investing a portion of the $2.7 trillion trust fund.
Investing it where?
In stock market, equity convertible treasury notes. Think of them like bonds, but they could potentially tap into stock market gains, aiming for higher returns.
Interesting. Market-linked returns for Social Security.
Yeah, but look, this innovative strategy, it hasn't gained much traction with the current Social Security Commissioner. It highlights that tension, seeking higher returns versus a more conservative, low-risk approach for public funds.
Okay, shifting gears now to technology. AI is everywhere. How is it practically impacting businesses like, say, Clorox today? Are jobs being cut?
It's definitely something else entirely, not really job cuts at this stage for companies like Clorox. They're using generative AI more to massively scale things, like advertising content,
Yeah.
and to enhance product R&D.
So volume and ideas.
Exactly. But here's the catch. While AI can generate a lot of ideas, maybe only about a third are typically seen as worthwhile. So you still absolutely need human oversight, human judgment to refine those AI outputs. It's amplification, really, not replacement.
Amplification, okay. Well, and beyond production, how is AI reshaping how businesses connect with customers? This zero-click internet idea is fascinating.
It is. A whole new wave of startups is betting that traditional search is, well, on its way out, rapidly. They're focused on helping brands optimize for AI chatbots, like ChatGPT.
So people just ask the AI and get the answer.
Precisely. It signals this major shift toward a zero-click internet. The AI gives you direct answers, often bypassing Google or other search engines entirely.
That changes everything for online visibility.
Fundamentally, it redefines how brands connect with you online. Direct AI-optimized content becomes paramount.
Okay, one last area, an emerging market. The intersection of healthcare and investment. Psychedelics. What's the story there?
Yeah, there's definitely growing investor interest, particularly within this Make America Healthy Again kind of framing. A recent mid-stage trial caught attention. It was for treatment-resistant depression using a nasal spray.
And the results?
Shows significant clinical effects. But the key thing was the observation period.
Yeah.
Just 2 hours.
2 hours, that's short.
Remarkably short. And that's the potential commercial breakthrough. It aligns with existing successful models like J&J's Spravato. It could unlock a large, underserved market for this new class of therapy. That short duration makes it commercially viable.
Very interesting. Okay, as we wrap up, we've got 3 thought-provoking questions for you, our listener, to really chew on.
Right. First one. Considering this reemergence of speculative YOLO bets, how might you balance that allure of quick gains with the long-term reality? The fact that sustainable returns fundamentally come back to earnings. What's your critical examination process look like? Second, with the ultra-rich increasingly diversifying assets globally because of geopolitical risks, how might this trend reshape traditional banking? And what about international capital flows in the coming years? What's the ripple effect there? And finally, number 3, given this rapid shift to a zero-click internet where AI gives direct answers, what's the single most critical strategic shift your company, or really any company, needs to make right now to stay competitive and, frankly, visible?
Lots to think about there. That's it for this deep dive. Thank you so much for joining us. We hope this is getting you a fresh perspective on today's crucial financial and market trends.